Hi, this is Scott Caulfield with Sophos Wealth Management. I'm a CPA and a CFA charter holder, and I want to take a quick look at the Seattle area housing market today. Everybody knows housing's been booming over the last few years, both locally and nationwide, and it's certainly prompted a lot of people to wonder, is this a second bubble? I think if you just look at the numbers, it is. Housing in Seattle is more expensive than it was at the bubble peak. Housing nationwide is more expensive than it was in the bubble peak. I think when you take into account other factors, it's a little murkier. So let's take the first piece. If you look at how expensive is our homes in Seattle, I like to look at the median housing price relative to the median income. So what does the average house cost versus what does the average person make? In 06, 07, we hit a peak here in King County, greater Seattle area, around 7. And it backed off quite a bit from 2011-12, although it did settle to kind of a higher new normal relative to kind of the history. But thanks to the huge appreciation last year, we've seen that surge to new all-time highs. So 8.5, almost 9, which is quite concerning, especially given how recent the last bubble was. The average household income in King County has actually done quite well. It's just that the surge in house prices has just been huge. And you've seen the same thing nationwide. So nationwide, the housing was quite a bit below its peak all the way up until the last few months, and it has just surged. Now, just because housing has been expensive, that in and of itself does not necessarily mean we're in a bubble. And one other factor that's kind of different with housing is that mortgage rates do matter, at least in terms of short-term affordability. And, where we are at today, or at least, especially at the housing's peak here, 21, 22, you had mortgage rates below 3%. And, that was half the levels they were in the last bubble. Now, obviously this year that has changed dramatically, and that's a huge factor in cooling off housing. At least we're not seeing the same appreciation that we did. So I think the affordability that was there and was helping keep this propped up has kind of gone away. And I think if mortgage rates were to stay this high, that's going to just put more and more pressure on housing. Now, there is one other, kind of the other factor in determining, is this a bubble, are some of the squishier, softer factors. So, in stock markets, when we look at bubbles, we wonder what kind of speculative behavior is going on, what kind of frauds are going on, what kind of day trading, get rich quick type stuff. Think back to late 90s tech bubble. You had the pets.com of the world. You had the sketchy things going on in Enron. You had college kids day trading, all kinds of stuff. Back in the real estate bubble, you had cab drivers who had 6 rentals. You had all kinds of people getting, with no income, no jobs, no assets, getting super low interest loans, no verification. I think you're not hearing nearly as much of that. You hear a lot of stories about tons of bidding going on and some of the craziness there, but you're not hearing nearly as many of these sort of bubble anecdotes as you've heard in the past. And I think, there are some legitimate factors too that have contributed. So lack of supply, coming out of the housing bubble, people were very reticent to build. And, I think some of that's legit and is definitely factoring in here. But to me, the price you pay is still the most important factor in any financial decision. And so even with supply being constrained, even with mortgage rates being low, I personally am very hesitant, when I look at housing prices at all-time highs, at least relative to income. And, housing is obviously way more than just a financial decision, but it's definitely not a time to be aggressive. It's not a time to buy too much house. And I do think, especially for those looking at rentals and investments, this is a real time for caution. And, as a last note, I think there's a high chance the economy goes into recession. The Fed is going to have to keep the pedal to the metal. They're going to have to keep raising interest rates. As long as inflation stays high, that's going to keep pressure on rates, and that's going to keep pressure on housing. And if the economy does break and we go into recession, I think a good chance you'll see a cooling off of housing prices combined with lower mortgage rates. So it's my personal belief that there's a good chance you would have a better opportunity to buy a house in, a couple years from now, potentially. But to the extent you want to discuss any of this with me or your financial decision, always happy to take a call. Other than that, thanks for tuning in today.